another Market Matters video update. It's the 31st of March, the last day of the first quarter of 2021. How have markets fared in the first quarter of this year, James, and how have the Market Matters portfolios gone?
Yeah, so it's been a positive quarter from an equity standpoint. So the ASX to yesterday's close was up at 2.3%. We're up another 100 points today, so chucking another 1.2 to 1.3% on the back of that. But it's an interesting, I guess, dynamic from a sector point of view. So if you think about the financials are actually the best performing sector, or have been the best performing sector this quarter. They're up more than 10% as a group. IT, on the other hand, was down about 12%. So you had a huge divergence in the market in terms of what different sectors did, and that played somewhat into how the Market Matters portfolios perform. So in terms of the flagship growth portfolio, we had a really strong start to the quarter. We tapered off a little bit towards the end of the quarter in terms of relative performance, but still a positive period nonetheless. The income portfolio has done consistently well through the period. The emerging companies portfolio has been had some really strong periods. We had a really weak period last week to end the quarter, but overall that's going to deliver some strong returns for the 3 months to March 31. And then the international portfolios have done well. The Aussie dollar has sort of been strong at the start of the quarter and tapered off a little bit towards the end of the quarter. So it's had a negative impact overall. But I sit back here, March 31, you reflect on how you've gone. I was happier 2 weeks ago, but I'm relatively happy now, Harry.
All right, we're starting to move towards a more neutral stance. We talked about that in a few of the morning reports, more so in today's report. S&P heading towards 4,000 is sort of our call at the moment. It's only a stone's throw away. Can you talk us through that call and what's your view around it?
I guess we've seen the equity market, and I think the Aussie market is a really clear case in point. The fact that it's been in this consolidation band for the last 3 or 4 months. So, broadly speaking, in the ASX 200, 6,900 on the upside, 6,500 on the downside. That's 4%. That's 400 points, I should say. It's about a 6% range for the Aussie market. So the fact that we've been just oscillating in this tight range, we've been buyers of weakness, sellers of strength, sort of from an index point of view. There's been a lot of sector rotation under the hood. I think it just lends itself to a potential shock of less positive news can be the sort of the straw that breaks the camel's back in the short term for equity. So I've just written, if we punch up to 4,000 on the S&P, that's only 1% or 2% away. But the next 10% move is likely to be down in equities, and that's not a big call. We always have, we have 10% moves pretty regularly in terms of the equity market. So I don't want to stand here and say I'm bearish the market, because I certainly am not. I'm bullish over the next 1 to 2 years. I think as inflation picks up, as global growth picks up, as interest rates stay low, the backdrop for equities and particular parts of the equity market is really strong. So I'm not turning bearish, just from a short-term tactical sense. I want to have a bit of cash up my sleeve to be able to take advantage of that pullback in markets if it comes, Harry. If it doesn't come, we're still pretty well committed to stocks.
Certainly. You talk about a pullback. Which area of the market do you think will outperform if there is a pullback and we go on with it, or if we run from here?
Yeah, I reckon so. You're essentially asking about risk reward. So from a sector point of view, I think at the moment the market has turned really bearish tech. We're more bullish on the value trade, the reflation trade over the next 1 to 2 years. But I think in the very short term, the market has gotten too negative on the tech trade. Rising bond yields have caused some concern around valuations there. So I think the market positioning suggests to me that we could have a short-term squeeze on the upside in tech. So in the short term, I think technology does well, but I think that's a rally that we should be fading and increasing our allocations into the more value-orientated parts of the market.
All right, across the portfolios, what are the stocks you stand ready to buy from a portfolio perspective? Where would you be pulling triggers?
So I guess the question is about what stocks that we hold now. Would we go out there and buy with our ears pulled back, pin back is the saying, I should say. In terms of the flagship growth, I wrote about Magellan this morning. I think we're looking to average that position. I think that's a buy under $45. I think the resources trade as well is something I'm really conscious of going out the next 12 months. So we've trimmed our resources, but I'm a buyer and I've got the 12 to 24 month view is a really bullish one for resources. So I think BHP around $45 we've written this week represents really strong value. So that's for the flagship growth. The income portfolio, I like some of these beaten up plays. So high yield, cheap valuations. The market's pricing in a lot of negativity. So IAG and Dexus would be two I'd be buying here and now. In terms of the emerging companies portfolio, we were speaking about it before. Oracobra, ORE is one we'd buy at the moment. And in the international space, we've got in the international equities portfolio, the trade desk is something I really like. It's been a long-term position. It's been a good one for us, but it's been hit really hard from 900 down to around 600. I'd be a very happy buyer of that one. And then in the ETF portfolio, the macro ETF portfolio, that's a portfolio that sort of shows our macro calls. We have trimmed the copper. Well, we've sold out of the copper ETF recently, but I'm still really bullish commodity. So it's not one we hold, but the MXI is in that is in the global commodity market. So I'll be using weakness in the commodity space here and now to be buyers of that one.
Certainly. Thanks for joining us, Jay.